So my stop loss has got hit on this stock. This is actually my third video on this particular stock. On in my first video, I explained why I bought the stock on this day as it was crossing that yellow band. In my second video, I discussed why I sold like 20% of my position size uh, on this day. This was the Muhurat trading day in India. Muhurat trading day marks the new year of the Hindu calendar, and uh, I sold 20% of my position. And now this is the third video where I want to discuss where I had kept my stop loss and how did it got hit, and I'm completely out of the position now. Okay. So this video is more about how I managed this trade. So if we start from the beginning, okay, why did I buy the stock here? Because it was comparatively strong, technically strong, fundamentally strong. Now, I will not go to MarketSmith to discuss everything all over again. You can watch those two videos I had made earlier. Just type Poly Medicure and you will find those two videos. So this stock was comparatively, technically, and fundamentally strong. The only problem with this stock was the average daily volume of the stock is less than 200,000 shares. So if you see this blue line on this day, it was less than 200,000 shares. So I was a bit cautious. I know that stocks with less than 200,000 shares traded per day are slightly riskier, but I still took a chance. I said, okay, if there are other factors which are in my favor, the volume is something that I can manage. So I decided to take the trade. I took one attempt. I think I lost money there. Then I took a second attempt. Stock started to go up, held up above that yellow band on very high volume. I was in the position. I sold 20% of my position size. One thing I want to clarify here, in my first video, I mentioned that my position size was 5%, but it is actually 6.25% because as I double checked how many shares I bought, compared it to my portfolio, it is 6.25% position size, out of which 20% were sold here. So my buy price, average execution price is somewhere between these two yellow lines. I think it was 2873 or something. Okay, so between these two yellow lines was my buy price. Somewhere here I sold for a 14% profit. I think it was 14.51% profit on those 20% of shares. The remaining 80%, if you remember, I had told you that on the remaining 80%, I decided to keep my stop loss at my average execution price so that even if it comes down and hits my stop loss, I will never lose money on the stock. So I at least make money on the 20% of my total position size invested in the stock. So, and that's exactly what happened. The stock came down and hit my stop loss. I'm out of the trade. Okay. So, out of the total position, I broke even on 80% of the total position and made a profit on 20% of the position. Not a huge profit, it's a tiny profit, but that profit can be used to finance the risk on my future trades. Okay. Now, the question is this: why did I not sell on this candle? Why did I not sell on this candle? Why did I not sell on this day when it actually broke the 8-day exponential? Why did I not sell on these 2 days when it was coming very close to my break even? Well, this is where trade management comes into play. As I have been discussing with you earlier, in if you want to become a professional trader, you will have to master three skills: stock selection, trade execution, trade management. So stock selection and trade execution is fine. That is where trading is a science. But the moment you go into trade management, that is where trading becomes more of a art than a science. So what happened is, on the remaining 80% of the shares, I decided that I will free roll the trade. I will not I will not sell the stock as long as it remains above that blue line, which is the 50-day simple moving average, because this stock was comparatively, technically, and fundamentally strong. So that is a decision I had made. However, in that decision was another decision not to lose money on that trade. What's the point in making money on 20% of the shares if I'm losing money on the remaining 80%? So although in my mind I had decided that I will keep the stock as long as it remains above the blue line, But I knew that my stop loss had to be in the at the break even point because it's a low volume stock. The average daily volume is less than 200,000 shares. So that was my philosophy behind managing this trade. So that is why in this downfall, which is more of the result of the market downfall, this has got nothing to do with the stock per se. That is what my understanding is. This downfall was because the index itself was falling during these 2 weeks. So that put pressure on the stock. The stock came down and it just hit my stop loss. No problem. I made money on the 20% of the shares, which I can use to finance my future profits. Now, another thing, see, if I remove this base and if I draw this base here, see, it's forming another base now. So 1, 2, 3, 4, 5, 6, 7, 8, 9. If after one more candle, the base will be formed. I mean, there will be minimum 10 candles in the base. Okay. Then I will start to look for a buy point in the blue zone or the green zone. So I might jump back into the stock and buy back all the shares that I had sold here, or my stop loss got hit, and I'll get another opportunity to get into the stock. But as of now, I don't want to stay with the stock which is falling down. Okay. So this is the way I have managed my trade. So sometimes what happens is you might have realized gains from the past, which increases your ability to take risk. So if your risk tolerance increases, you can afford not to sell here. But imagine in your past 4 or 5 trades, you have just broken even or you have lost money. Then in this case, if I was there, I would sell my shares because I want to book profits. Okay. So it all depends on your recent realized gains. Now, recent could be past 1 month, past 2 months, past 3 months, or recent could also be your past 4 or 5 trades. Okay. So what I'm saying is the more realized gains you have, the more it increases your ability to take risk. The less realized gains you have, it decreases your ability to take risk. So it all depends. Just because it broke the 8-day exponential doesn't mean that you sell. It simply means that you have to start reconsidering the position. So this was my little small lesson on trade management. I will make more lessons on trade management. Probably I might make another video on this talk just to specifically discuss trade management. Okay. But as of now, I just wanted to make this short video to tell you that my stop loss has hit and I'm out of the position. Okay. So I hope this video has added value to you. Do not forget to download the swing trading checklist, the position trading checklist, and the stock categorization checklist. I will also make a pre-recorded webinar on stock trading. I will put the link in some other video, but download those checklists that will have questions that you can ask yourself before you put a stock on your buy alert list or your watch list. Thank you so much for your time. Thank you so much for your support.